Hello there, Mavericks. This is Imri, and welcome to today's currency update. It is Wednesday, December 13th, and it is also Fed Day. So we've got lots to talk about. Today we'll be doing a review of the trading day, going over whatever meaningful news of the day there was. We'll be taking a look at the equity markets and some commodities as well. We're then going to look at the major indices, do a bit of technical analysis on those. We'll then pivot to the currency baskets, take a look at any major news reports coming out for the week, and wrapping things up, as always, by taking a look at some trade setups. In this currency recap, we will be using some advanced technical analysis. We believe technical analysis is the fundamental skill for every profitable Forex and crypto trader. Maverick Currencies is currently hiring serious technical traders for a trader position. Traders will trade firm capital and keep 70 to 80% of the profits. So if you're a technical trader with a technically based trading system, we want to meet you. So please click the application link in the description below this video. Now let's break down today's market action. In today's market analysis, the major news is that the Fed is keeping rates between 5.25 to 5.5%. Now, this was as expected, but it's important news nonetheless. What was less expected is that the Fed's projecting 75 basis points in cuts for 2024. And it's going to be absolutely wild if they end up cutting more than that. But it could also provoke an extremely bearish reaction if they cut less than that. So now the Fed's come out with some very clear guidance, although, Powell has said they remain data dependent and they won't hesitate to tighten if conditions warranted. But at this point, Powell is kind of, I think, being a little bit like the boy who cried wolf. He's said for so long that he doesn't hesitate, or he's not going to hesitate to take action if inflation comes back. But he said it so many times that the threat is kind of losing credibility. And we've definitely seen that based off of the market's bullish reaction today. So speaking of which, S&P up 1.37%, total world stock index up almost 1.5%, crypto up over 3%, gold up over 2%, and oil making a recovery here up 1.63% on the day. And over in the currency side of things, as you could expect off of such a dovish comment from Powell, the dollar has taken a beating, but so has the Swiss franc and the pound. The euro holding its head, I wouldn't say above water, but, slightly under for the day. Same with the loonie, the Aussie and the yen, big winners on the day, and the Kiwi was also up on the day. So interesting divergence there. As far as cryptos go, after a pretty vicious day yesterday, we're back in black for all the major market cap cryptos. Bitcoin leading the way here, up over 3%. In terms of the market outlook, we're sticking with a +3 here. I think this market is really stretched out, and I think it's very possible we're going to peak early in the new year before we get a sizable sell-off. But for now, all systems are green. Taking a look at this chart, it's pretty wild. Since the end of October, we've gone almost parabolic. Part of me wouldn't be shocked if today's high is the end of this rally before we get a bit of a pullback. But if it's not, then I suspect we will see a significant high being put in place early in the new year. As far as news goes, if you thought we were done with the fireworks today, you would be likely incorrect. This evening, we have employment news out of Australia. Tomorrow, we have the SNB, which is the Swiss National Bank, coming out with their own policy rate information. We're going to have an official bank rate out of England as well, or the UK to be more precise. Same with the euro. And we're going to get some inflationary data out of the US as well. And then, to wrap things up on Friday, we're going to have some flash manufacturing PMI. We're also going to have unemployment claims and retail sales on Thursday out of the US as well. So a ton of data to end the week. I think the fireworks could potentially just be starting. We'll talk a little bit more about that when we take a look at some setups. Okay, so in terms of currency analysis, the volatility score is, this is Santa delivering Christmas presents to traders right now. We've got extremes in volatility and velocity. So the yen, the Aussie, and the Kiwi all +3 today. Dollar, Swissy, pound, and the loonie all -3, and the euro even down at a -1. So we're going to take a look at what that actually means right now as we head on over to TradingView. So the yen, I fully expect us to get back to this high here. So I think there is still some runway in the short term, to be long yen. I think we'll actually probably exceed this high as well. So lots to look forward to. I think the yen crosses are going to be exciting once again. The dollar, well, we've just broken the fresh lows in the dollar, and this means I think we're likely going to give back the entire summer rally, and I think we're looking at the July low as a potential target for the dollar. So that's very exciting. I love it when there's a clear target in sight. Means that there's a lot of good trading opportunities to come. Love dollar yen to the downside. All right, the Swissy. So speaking of things working out nicely, we got the move to the bottom of the channel that I was calling for last week, and we've now broken out the bottom of the channel. So that puts in mind this target for me right now, lows from the beginning of November. Heading over to the euro. So we did get that move to, we did get a move lower in the euro, and this choppy bear market rally makes me think we're going to see further lows in the euro as well. What targets can we look forward to? I would say the lows from June, very reasonable here. Okay, pound. Finally, the pound's broken down. I think our first preliminary target here in the pound can be the lows from October. So just to recap, folks, right now what I'm seeing is a strong yen, weak dollar, weak Swissy, weak euro, weak pound, and a weak loonie. We've broken again at the bottom of this channel, and I think we're headed all the way back down to where we were in March 2023, end of March 2023. The Aussie dollar is different. Okay, so other than the yen, this is the other currency that I'm bullish on right now. I want to see the Aussie climb back now to where we were at the end of November. So there is still a little bit of room here, provided we get some nice trend continuation patterns. Once we clear this high, or if we clear this high, I'm going to be very cautious because I would expect a pullback, and then we'll have to wait and see what happens next. Okay, last currency basket before we take a look at the cryptocurrency basket is the New Zealand dollar. So we've broken out of this inverse head and shoulders. I think we're headed towards this high here from December 2022. I'm very bullish on the Kiwi now that this chart pattern has finally completed. Okay, so to sum up, strong Aussie, strong Kiwi, strong yen, at least for the short term, and everything else looks pretty weak, at least for now. Bitcoin, or the crypto basket, I should say. So we had this pretty vicious sell-off. It's still too early in my mind to say whether or not this is going to be a bear market rally and we're going to see further downside. My hunch is yes, it is. I think Bitcoin's probably going to top out today or tomorrow. Personally, I'm looking for a move in this crypto basket back to where we were towards the end of November at a minimum. So I think we're going to have a chance to pick up crypto at cheaper prices in the near future. So yeah, that's my view. If we, however, get a nice shallow sideways consolidation, like a base here, buy that thing all day, all right? Then that would be a good opportunity to buy some crypto. But personally, I'm leaning towards a bit more of a pullback before we have an opportunity for another significant bull run. All right, traders. So in conclusion, always look to play relative strength and weakness. You can see how well this works week in, week out. It is the #1 way to ensure you're on the right side of the market. And when markets are as volatile as they are today, it's all the more important to pay proper attention to position sizing and following the trading plan. All right, traders, that's it for me. I'm actually going to be traveling now for the rest of the year, so I will see you in 2024. Bye for now. Happy trading.